HIMS is up 123% year to date. I'm seeing many investors skipping the stock just because it's up, and many investors are taking profits just because the stock was up 123% year to date. I've made this mistake before, and I'm not doing it now. And I hope this video will help you not commit the same mistake most investors are making with the stock. And even back in January 1st, I made this post on X. I said HIMS could easily double in 2025, $50 plus. People call me a stock pumper, that I'm pumping the stock and I'm trying to pump my bags, even though I had the stock from $7. I'm up 600%. I'm not selling anytime soon. And if you're looking into the company, you shouldn't let the stock price influence you, because the stock could double to $100 per share this year, and it still wouldn't be considered expensive. If you just make a very simple comparison with HIMS versus other growth stocks, popular growth stocks in the market. It's not the same business model, but this is to show you what the market is willing to pay up for growth. If you look at Palantir in the pink, it's trading at 72 times forward sales, 72 times. Duolingo, 22 times forward sales. Robinhood, which I own, is 17 times forward sales. HIMS is only 5 times forward sales, only 5 times. They're growing sales 100%. They have $1 billion in cash. They're doing acquisitions. They have no debt. They're growing 100% plus in revenues. It's only 5 times sales. So if HIMS goes to 10 times sales, the stock goes to $100, $110, it still wouldn't be expensive on a relative basis. Yet many investors, I'm seeing them, they're telling me I'm taking profits. HIMS went up, I'm selling. I'm like, yes, maybe you're right. Maybe HIMS goes back to 30. But looking at the fundamentals, there's no reason to sell. I would be buying here if I didn't have the stock. I mean, to me, it's absolutely insane. So I'm going to do a very quick overview of the business model, very quick, and I'm going to tell you about what has happened with the recent acquisition and why I believe something major is coming for HIMS that most people aren't really looking at. So I really hope you enjoy it as always. I always like to say that HIMS isn't just a weight loss company or a boner pill company like people like to say. It's more about mental health and anxiety, depression. This alone is 100 million people in the United States, 100 million, and they are expanding internationally. So the TAM in mental health alone is insane. In sexual health, 80 million people. Dermatology, hair loss, acne, common stuff, 80 million people. Weight loss, 100 million people, likely more than 100 million, especially outside the United States. It's also a major problem. They have many things coming up: testosterone, menopause, longevity, sleep. Sleep is a big one. And preventative medicine, and they're doing in-lab testing and in-home testing and many different things. And they don't just sell the drug over the counter like they do, like they get it from Walgreens and they sell it to you for $2 or whatever. They don't do that. They have some kind of compounding facilities in Ohio, in New Jersey, Arizona, California, multiple ones, and then they adjust the dosage for this specific product to be for you. So let's say you have side effects whenever you take Wegovy. Okay, maybe you lose sleep at night or something happens to you. Wegovy is not going to adjust the dosage to fit your needs, but HIMS will adjust the dosage. So this is more personalized medicine for you. Instead of just buying whatever everyone else is buying, you buy something that adheres to what you're comfortable with, that adheres to prevent as much side effect as possible. And this is the future. HIMS is a leader in this one. They recently partnered with NVO to sell Wegovy on their platform, and they also have an affiliation with Eli Lilly. Now, the important part about this, and I said it before, isn't that HIMS will sell Wegovy on their website. That's nothing. What really means to me is that the big guys are looking to partner with HIMS. They're not looking to kill HIMS. Whenever a young company like HIMS is coming up in the healthcare space, you have the dinosaurs, the legacy companies. They normally want to sue you. They can cause a lot of damage. They have a lot of politicians, a lot of resources, a lot of money. They can do you a lot of harm. But those companies have realized how innovative HIMS is. So now they're partnering with HIMS, which reduces the likelihood of a potential lawsuit. Because if HIMS is doing well, then Wegovy, which is owned by NVO, is going to do well. Then the Zepbound of Eli Lilly is also going to do well if HIMS is doing well. So they're partnering together instead of fighting each other. And this is a game changer for the company. And I don't believe it's priced in enough in the stock. Now, if you look at the subscriber growth, 38% to 2.4 million people, revenue 111% growth, adjusted EBITDA is expanding, and profitability is expanding in general. Now, normally most people are a little bit lazy, I'm just gonna say it, and they like to, whenever they look at HIMS, the first thing that comes to their mind is Teledoc. And I've been telling them from $10 per share, I'm like, guys, HIMS is not the next Teledoc, because Teledoc is an insurance. HIMS is outside of insurance, which is more profitable. They have more control over their pricing. So if you look at the revenue per member for Teledoc, it's $1.30, only $1.30. For HIMS, it's $84 per member, 84 versus $1.30. And you guys are telling me that HIMS is the next Teledoc. To me, it's absolutely insane. But the impressive part about HIMS isn't that they just grew members from 1.5 million to 2.4 million, but alongside growing members, they also grew the average revenue per member from 53 to 84. And this is mainly because they were able to cross-sell a lot of things to different members. For example, let's say someone joined HIMS for the weight loss product and they find results. Maybe they also have hair loss or anxiety. Those things, they tend to be linked sometimes. And that you could also help them with other things, and they cross-sell them the products without having to spend more money on advertising, which is a beautiful, beautiful business model. Now, the recent acquisitions that have happened is the HIMS and Hers platform. They acquired a company called Zava, and Zava's goal is to accelerate major European growth across the UK, Germany, France, and Ireland. And if we look at this acquisition, they serve over 1.3 million customers, and Zava's in-house medical team have delivered nearly 2.3 million consultations in 2024 across the UK, Germany, France, Ireland. So that's going to be an amazing acquisition from HIMS. And if we look at some recent posts on X, which I did check and it's accurate, is Zava, which operates in Europe, they already offer NVO and Eli Lilly and other generic liraglutide and other things on their platform. So that's going to make it much easier for HIMS to scale the platform instead of them getting all kind of regulatory approval, which is much harder in Europe. So that was actually a very smart acquisition from the team. But this is the part that most people on X aren't talking about, is HIMS, they said that the acquisition will be compromised of 100% cash. They didn't specify the price. Now, normally most public companies, they don't give you the price if the acquisition is small. So if the acquisition is small, let's say under 500 million, or it's small relative to the company in general, they normally don't give you the size of the company. If it's a major acquisition, something really large, it normally takes longer to be approved, and they normally have to give you the price. And sometimes it even includes stock dilution because it's just a very expensive acquisition. Now, in this case, the acquisition is going to be 100% cash, and it's going to close in the second half of 2025, which is fast. And that tells me that this is likely a very small acquisition, and it tells me that because it's going to close in the second half. If it was a major one, it could sometimes take a year to close, or much more than 6 months for acquisitions like that. Now, something that's very interesting is the CEO said that they raised $1 billion in cash. So now they have $1 billion in cash on top of the current $332 million. So before this acquisition, they had $1.3 billion in cash and no debt. That's a lot of cash. Now, based on estimates from some Wall Street analysts, they expect Zava's revenues to be in the range of $100 million. Now, assuming that HIMS paid around 2 to 3 times sales, which what I would assume it is. I would highly doubt they paid 10 times sales for Zava. That would be a big acquisition, $1 billion. They would have to announce it 100%. So I believe they paid 2 to 3 times sales. Now, if they did pay 2 to 3 times sales, let's say on the maximum, this is a $300 million acquisition. Well, if they use their cash to acquire it for $300 million, that means they still have $1 billion left in cash and cash equivalent, which means there's likely another acquisition coming. This is major news that not a lot of investors are talking about. They're celebrating the acquisition like that was the acquisitions they've been waiting for. But the truth is, to me, it looks like this is a very tiny acquisition and there's something much, much bigger coming, So that's, to me, is amazing news. And I don't believe they overpaid. If it was like $1 billion acquisition or like 10 times sales or something crazy, they would have to announce it 100%. But they didn't announce the size because it was likely a tiny acquisition. So to me, there's just so many call options with the company where this is an extra 100 million in revenue. This is an extra 1.3 million people, 50% increase in membership just out of 100 million. That, to me, that's just amazing. So amazing news for the company. And based on their latest report, they announced a 2030 target of $6.5 billion. And I believe that excludes a lot of acquisitions that could potentially come. Now, $6.5 billion in revenues, I did this valuation model on HIMS. I used 3 times sales, 5 times sales, and 10 times sales. Now, based on how the company is expanding, how they're executing, I don't believe 3 times sales is going to be the valuation. I believe it will likely be 5 times sales to 10 times sales. So if we use the 5 times sales multiple, where HIMS is trading at right now, I'm seeing $145.30 per share by 2030, which is 5 years from now. If we use 10 times sales, this is $292 per share by 2030, and the stock right now is only trading at $56 per share. So to me, the way I would look at HIMS is HIMS could double this year to 10 times sales. It would trade at $100, and you could still make the argument that HIMS on a relative basis is not expensive at all. And by 2030, I see at least $300 per share, and that's excluding any acquisitions. I didn't know they were going to raise $1 billion. I didn't know any of that stuff. So to me, I think investors would be making a major mistake if they're taking profits on HIMS just because the stock went up, or if they're skipping it just because the stock is up. I know it's a mental barrier. It's very hard to do. I'm not telling investors to FOMO, but I'm telling investors to research the company, build up conviction. And then once you have conviction, then you're comfortable entering and dollar cost averaging down or buying up. I averaged up from $7. I bought at 10, I bought at 11, I bought at 21, and I've just been averaging up on the stock whenever I get a chance, because I believe the company is $100 billion company plus over the long term. So I really like HIMS. I like the recent developments, and that's not financial advice, just my opinion. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.